Thanks for joining the podcast. How you doing?
I'm good, Dave. How are you? Good to see you again.
Good to see you. So, in the meantime, I've met our mutual friend Greg Foss, and
Right.
we had a great time over in Amsterdam at the Bitcoin conference, which was my first. It was really cool. It
Yeah.
was so approachable. Like there was virtually nobody there, and everybody. I mean, Jeff Booth, who I adore, a nice chat with
hmm
him, and the Prince of Serbia, and so it's just a great crowd. So for our listeners here, Mark, I want you to try to put yourself in the headspace you were in prior to learning so much about crypto and Bitcoin, right? Because our clients are coming at this from a perspective of, they're really busy, they're entrepreneurs, and they see these news flashes and narratives, and it's really hard to get to the bottom of it. So what I tried to do with Greg was say, let's get really basic about Bitcoin. What are the merits of it? What's your view of
hmm
it? Here's a guy who's managed risk for 30 years. Let's talk. So, from your perspective, we're going to do this beautiful sort of other side of the coin, which is to say crypto, which is a
hmm
very different asset class.
Yeah.
And so I want you to talk, you are the crypto capitalist, just so everybody knows. I want you to do your background. But after that, tell us, what do you think about crypto? What do you think about crypto versus Bitcoin? And where are we in this sort of entrepreneurial tech cycle? And I know those are big, broad terms, but I'm just setting it so you can talk directly to our audience. So maybe background first, Mark, or wherever you want to start.
I gotta preface something, and you might want to even edit this out. So
Go ahead, man.
I'm
We
like,
don't edit much. Go ahead.
I'm like way more of a Bitcoin maxi now than I was, to the point where I'm actually rebranding the letter the Bitcoin capitalist.
I love it though. I was
Okay.
actually going to struggle with. So here, let's say this: there's Bitcoin and there's everything else, and I don't say that disparagingly. There's
Yeah.
Bitcoin; it's very unique, and then there's crypto, and there's, by the way, every other incorporated private business is in that same category. They're run by people subject to their rules. They're not decentralized. That doesn't make them bad. It just makes them different. So
Yeah.
go ahead.
Right. And so the way I look at it internally, or like in my own mental model, is like, and I come up from the tech background, right? So Bitcoin is the operating system, and everything else are applications on the operating system, right? So Bitcoin is TCP/IP, let's say, not even an operating system, it's a protocol. And like Ethereum is Windows. I mean, that's how I'm looking at this sort of thing. And
Yeah.
so granted, there's going to be crypto projects that are the equivalent of Oracle and Windows, and like you're going to have these huge monster success stories in crypto that are companies, that are operating systems unto themselves, that are payment protocols, but they're all they're all sort of, you have to treat them as on their own merits, as companies unto themselves or projects unto themselves, whereas Bitcoin is like that complete shift in approach, that regime change in the architecture of money itself, that changes everything and makes all that other stuff possible. And so owning Bitcoin for me, and my preferred way to own it is to earn it, and I've been doing that through my business since 2013. um, that's just me saving. That's just my capital. That's just me saving wealth. Whereas anything I do on Ethereum, or we're involved with Ethereum name service, and looking at all these other things like IPFS and other projects, decentralized VPNs and stuff like that. Those are all projects. Those are all programs. They're software, and they're revolutionary if they're using a blockchain, or even if they're using a crypto token or tokenizing itself. So it's all really new stuff. And some of it is going to be runaway success. And but like anything, it's like, you invest your clients' money into publicly traded companies. There's a lot of crap in there, and you got to sift through all that garbage. A lot of publicly traded companies are terrible, and so you have to sift through all that, and you have to find the good projects and the good companies.
So I just thought of this as you were speaking. Um, your analogy to the internet, people make that analogy a lot. That's fair. But you couldn't buy the internet. Here, you can buy Bitcoin.
Yeah.
Is that
Yeah.
a fair difference?
Yeah, I suppose that is a bit of a difference. I mean, in the old days, buying the internet would basically be, setting up infrastructure on it to claim you're part of the internet, I suppose. I mean, but it's not, I mean, that is because Bitcoin is a monetary technology, right? So when gold started being used as money, then people who were sort of ahead of the curve then were accumulating gold or trading their whatever was being used before that for gold. Not that it happened in such a dramatic and fast timeline as things move today. So yeah, you're literally because also Bitcoin was created as a reaction to a failing monetary system, right? So it really is sort of like moving from one boat to another boat because one of the ships is sinking, right? The fiat monetary system, and the other one's a lifeboat that's going to, get you away from that system as it kind of breaks apart.
And so let's go over that ground again, because only in the last year after reading Safeteen's book do I understand what you're saying. So I'm putting myself in the shoes of my clients and friends who haven't had the opportunity to get to the end of the book and to immerse themselves in this conversation. So when you say things like the fiat system's breaking it down, it sounds apocalyptic and it's like heresy. So it's easy to ignore.
Yeah.
So just build on it and let's make this point. Greg made the point, but you make the point too. What does it mean that this monetary fiat system is going to break that? Because it's sure been working for 100 years.
Well, but look at the graph of the purchasing power over the 100 years, though, right? So that's yeah. So everyone's probably seen the famous dollar bill graph that shows that since the creation of the Federal Reserve in the U.S., 1913, the U.S. dollar has lost something like 98% of its purchasing power. Now,
but how do I process that in my daily life? Because I don't feel, as I go from store to store and take my income, I don't feel like I've lost purchasing power. So how do you reconcile it?
Okay, so that's part of the issue is that many people think that inflation is a natural process, like erosion and the tides. They just think, oh, that's just what happens. Just like prices just go up over time. But if you look at that famous graph, all right, of what happened over the last 100 years and look at what happened for the 150 or 125 years before that, you don't see that same decline. So for the whole, call it this, that second wave of the Industrial Revolution, when there was no income tax and there was a lot less government interference and money actually held its purchasing power. Sometimes it even went up in purchasing power. There was deflationary periods through that time, and it's considered one of the most prosperous eras in human history. Now, 1913 comes in, central banking comes in, everyone goes off the gold standard to fight World War I. They never really go back on it. And everybody's money starts declining in value over time. And everyone thinks it's just perfectly natural. And I call that the treadmill economy. So what happens today when you're putting a down payment on a house or you're taking out a loan to buy a capital asset? You are always calculating the debt service versus the rate of inflation versus the rate of return, right? And that's like a calculation that we think is as natural as sunrise and sunset, but it's not, because normally if your currency is holding its purchasing power, you don't have to calculate real interest rates. They're just interest rates, right? Because the currency is solid. And so your cost of capital and your return on investment, you don't have to compare it to. You don't have to run on that treadmill of how fast is my currency losing its purchasing power. Okay, so it used to happen at a benign rate. Policymakers had these inflation targets and, everybody thought 2% was the magic number, but really that's just, I can go on a rant about that's institutionalized theft, but the reality, in practical terms, people didn't seem to squawk too much when inflation was 2% because people thought they could just run on the treadmill a little faster than 2%, and it feels like they're getting ahead. Then you get to those periods in history where inflation really takes off, right? And so we're in one of those periods now where it's higher than it's been in 40, 50 years, and it's still relatively benign compared to prior episodes. And you see the chaos that it's causing in the labor market and in the grocery store, and just like rippling through the economy of like, oh, now my purchasing power is dropping like 10% a year. And that's the official rate. In reality, it's probably 15, 17, maybe even higher. And that's just the inflation side of it. What happened in the last year, or maybe the last couple of years, is there's been this other component added to it, which is the weaponization of the financial system. And so as a small business owner, I'm always, I've been looking at things like cancel culture for the last 10 years, watching it accelerate, watching how people think that if they disagree with you, they have the right to take your business offline or destroy your ability to earn an income. And that used to be just sort of like private people, trying to go out and make trouble for people they didn't like. But then it became institutionalized, right? Last year, the Canadian government seized your bank account if you made a legal political donation to a cause that they disagreed with. All right. After that, the United States government seized the foreign asset or the foreign reserves of two sovereign nations. It doesn't matter that, one of those nations is run by the Taliban. The point is, right, everyone's calculus changes when it's like, oh, wait a minute. Do you mean that if somebody doesn't like me, they can arbitrarily seize my wealth and my capital base and my savings? Well, that changes things enormously. And so, the small business owner in me always feels like we're under siege from all sides, from big business, from governments, from, everybody. So it's like, okay, where can I accumulate some wealth or some capital where no one can attack me, either on a purchasing power basis or on a capital control basis or a capital flight basis? And I always come back to Bitcoin. I mean, people talk about gold. I was just listening to a podcast, Alistair McLeod from Gold Money on Wealthion, talking about this exact same issue, the weaponization of the dollar. And he kept going to gold. And I like gold, and I've been invested in gold for 30 years. But I can't press a button and move all my gold to another location in the world. I can't just get out of an area with my skin intact and get to another country and then just enter my secret keys and be replenished with all my gold. I can't do that. I don't have that same mobility. So I see a value in things like gold, but I always have them complemented by a digital bearer asset, of which Bitcoin and maybe something like Monero are the only ones really right now.
Yeah. All right. So you covered a ton of ground there. Let's go back to institutionalized theft. And so the way I've characterized it in my own brain is, well, actually from a value proposition of our business, we say there's two things that there's the thing that destroys wealth is taxation. But there's two kinds of taxation. There's direct taxation, which we're all very aware of, 53.53% of our income. But this other one is more insidious, and it's an indirect taxation. Every time the government wants to fund something, some project, which are generally speaking designed to attract votes so they can remain in power, and it doesn't matter which party we're talking about, they turn the printing press on and they increase the money supply and then do the project. Yeah, that is a form of taxation. So
yes, it is.
Talk about that, please, or put it in your own words, where for a very long time, the money supply and the inflation rate, the true inflation rate, has been north of 5%. And over 10 years, that'll get you to about what, 30% of your value left over. And that's what's happening. So can you talk about that?
So it's, to your point, it's like, if we can expand the money supply by, let's say, 5% to create a project that we think is going to give us a 10-year runway in office, but then we just take it back from the population at 2% a year, right? That means we get 20% back. We devalue that debt by 20%. We've got this big pork barrel project that has a 10-year, gave us 10 years in office. And what is it? So that's 20%, and you only expanded the money supply by 5% to get it. And it's like, well, everyone wins, right? It's even like almost the carbon tax. They say it's revenue neutral, so no one should complain about paying it, which is, I mean, maybe that's a bad, it's not an apples to apples example, but it's this free lunch mentality, but under the hood, there's this calculation that as long as we can keep devaluing the money supply at a rate that exceeds, what we're going to take, like if it exceeds over the lifetime of our projects, what we're going to take out each time to create the money supply for that project, then we're going to win in the long run. And then there's these extraordinary times like under COVID, where the world printed $37 trillion of M2 money in like 1 year. And in those times, it's like, well, the alternative is the entire system is going to go off the rails. Like it'll be the end of civilization. So we'll just deal with the fallout of that down the road. And now we see exactly where that's gotten us, because the policymakers, the central banks, are in this strange netherworld where they're trying to raise rates because they know when inflation gets north of 4 or 5%, the rabble doesn't like it. The peasants get restless. They start to notice that it's harder to feed their family and gas up their car and make their rent and mortgage payments when inflation is north of, call it 4, 5, 6%. So you got to do something to keep the pitchforks and torches off the streets, right? So you have to start to raise interest rates. And they say, well, we got to do demand destruction. But, demand destruction is your job, right? Like we got to create unemployment. We got to induce a recession. But you can't really induce a recession because recessions now are cataclysmic. There was a time when recessions were just kind of like this natural cycle of like wringing out the excess liquidity out of the system. And you could kind of let a recession run. It'd go for 6 months, 8 months, a year, kind of take all the excess out of the system, kind of reground everything, and you could go for another cycle. But that's not the case anymore, because that's the other part of all this that we haven't talked about yet is the artificial suppression of interest rates. The cost of capital, right? So you're expanding the money supply, you're printing all this money, you've got close to zero interest rates for 10 years. So everyone, you're stupid not to lever up practically. So everyone's levering up, and then so now you're painted into this corner where you have to raise interest rates, otherwise inflation's going to go up too hard. But if you raise interest rates, you're going to blow up the debt, you're going to puncture the debt bubble. And if the debt bubble implodes, then your monetary base caves in on itself, because we're using rehypothecated debt for money. So you're in this, like an Escher painting or a Mobius strip, right? Where you have this three-way thing of like, you can't do this and you can't do this and you can't do this. If you put it all in the other direction, where the common denominator is an expanding money supply, well, then it all works, until the inflation element of it gets too hot. But if you try to turn it counterclockwise, it just causes chaos. And that's what we're seeing right now. And it's really just the early innings. Like the recession that the interest rate cycle from last year, 2022, baked in hasn't even officially started yet, really.
Yeah, I agree with that. Okay, so let's go back and say, let's contrast the years since the Fed and then COVID. And the way I would phrase it, and tell me if you agree or disagree, COVID and the outrageous printing of money, or the exceptional amount of money printed, it's just a special case of what's been going on for 100 years.
Yeah.
So it's not just that COVID and a problem and a fix. That the best thing COVID's doing is uncovering this conversation where we're now looking at this printing of money saying, wait a second, that's a problem. So absent COVID, we were losing 5 to 7% of our purchasing power every year because that was the true expansion of the money supply.
Yeah.
Then we have COVID and we have $37 trillion, and who knows what that's going to do. And 6.5% isn't the final answer on that one, right? So
Yeah.
am I characterizing that right? And
Yeah.
tell me
Well,
what you
it's
think.
exactly that. It's what happened in COVID was an acceleration event, right? I always say that COVID pulled 20 years of creeping, monetary malfeasance, creeping authoritarianism, right? Creeping this, creeping that, pulled 20 years of it forward into 18 months, right? You're probably like you're the same age as me, like Era. You remember the New York Dolls album, Too Much, Too Soon?
I'm 57 and I don't remember the New York Dolls album, but
Oh, okay. Well, they had a record called Too Much, Too Soon. And that's been my mantra for the COVID era, right?
okay.
Too much stimulation in too short of a time. And so, in a sense, it was a good thing because it woke a lot of people up to like, oh, wait, this is this is what you get. Like if inflation is targeted at 2%, isn't more of everything good better? So why not target 10% inflation? Why aren't we targeting 50% inflation? Well, you see that, inflation is something you want to push as much as you can without people noticing. And once people notice it, it's no longer any good, right? And so, sorry about that. It was a compression. It was pulling all these effects that would have taken, like the boiling frog. It would have taken 20 years to boil the frog, but now the frog got charred in 18 months, and everyone sees this charred frog like curled up in the frying pan right now.
All right, so let's talk about, do you think there are ways to, here we are, not complaining, but observing these negative forces on wealth. Can we turn it around and use them to our advantage? And I want you to talk about two groups of people. One group of people is the folks, and it's the majority of people who make some normal wage or income. Let's just say somebody makes 100 grand in North America.
Mm-hmm.
That person does not have a gigantic stock portfolio or a cottage or other capital assets that are scarce and get inflated when the printing presses are on. That's what happens when there's free money and printing presses on. My value of my big house and my cottage go up, my stock portfolio goes up. So I'm okay, says the other group of people. The guy making 100 has a gigantic tax burden, and then every time he turns around or she turns around, prices are going up 5 and 7%. So that guy, very difficult for that person to exploit this, what we're now going to talk about. But I just do want to observe that these governmental policies in this fiat system are very, very hard on that group of people, which they're sort of virtue signaling as, oh, this is the people we're out to protect. So let's just demark those two groups of people. Now, the folks that have the opportunity to exploit these forces, what do you say about that?
Well, so I mean, it's actually the people who have resources and wealth. I mean, it's not just like your assets go up, but in a hyperinflation or in a high inflationary environment, you really are in wealth protection mode. So it's not just like, oh, all my assets are going up, because they're being chiseled away by inflation, and stock markets don't necessarily correlate with inflation anyway, right? Like they have a hard time in inflation. And then you get things like, especially with woke governments all over the world, you're going to have like wealth taxes and things like that. So it's no picnic for both groups of people, right? So because the working class people that you're talking about, and even like the affluent, like middle management who are making 100, 200 a year, they have a hard time of it with cost of living. And then the people who have assets, who are deemed, let's say, wealthy, they're demonized for causing all the problems. So it's like, well, let's make them pay for everything. The only people truly exempt in a case like this are like the like the 0.1% of the 1%, the ultra wealthy and the policymakers who either have a publicly guaranteed income or they're just flying around on a private jet that somebody else is paying for, taxpayers or something, to go to climate conferences, right? So I'd say the two camps underneath that sort of capstone class that sort of sets all these policies, they have similar problems. They have more in common than they have different. For the working class or the working affluent with not a lot of savings, not a lot of wealth, my mantra has always been, if you don't own a business, start a business, right? And if you own a business, start taking Bitcoin at that business. And so, and I always go there first instead of, well, you should just be buying Bitcoin. And I think you should be buying Bitcoin. Any amount. I think Greg Foss might have used the term get off zero when he was on your show, right? So like going back to that Alistair McLeod podcast on Wealthion, he was telling a story about the Weimar hyperinflation, right? And in the 1920s. And I had a great grandfather who got wiped out in that. But he said, there are stories, documented stories of like foreign students going to university in Berlin, and they were buying up streets of houses with their allowance that their parents were sending them from America, right? And he said, like with 5 ounces of gold, you could buy like a 6-bedroom manor in one of the best areas of Berlin. So I'm not saying we're going hyperinflationary, although I sometimes think I don't know what the alternative is. But so to working class people without a lot of savings or capital assets or wealth, I would say get off zero, right? Start a dollar cost average on Bitcoin, even if it's going to the corner store with $5 or $10 once a week, and make sure you self-custody it. Make sure, just stick it on the Bitcoin ATM and put it in your wallet, and just do that every week, right? And you're going to be in a different bucket than 90% of the population if we're right about any of this. And then for the people who, the other group of people who, let's say you're business owners, you're investors, you're sort of living off, you make your living from capital and from assets, not from wages. I'd say, you probably own businesses, you probably have investments in businesses. Just start earning Bitcoin through those businesses and keeping them on the balance sheet. And so for that second group, it's a balance sheet game. And for the first group, it's kind of a savings game, which is also a balance sheet, but it's just very similar approaches, just at different scales. But I think both groups get put into that, do you want to be a survivor or a statistic, right? When all this plays out, I want to be one of the survivors. And if I'm working class, I want to be one of the survivors. And if things really get unhinged, then, hey, you know what? If I can buy a rental condo with Bitcoin, with the Bitcoin that I've stashed, if things really get crazy, then that can make a really material difference in my life, down the road. So.
Okay, so that's exploiting the technology advantage of Bitcoin is what that's doing. What about the other side of it? Would you agree with the idea that if the fiat system is, to use great words, a Ponzi scheme, why not borrow a ton of it and buy something that's going to work? So borrow soft, borrow fiat, and buy hard. Right, buy Bitcoin or buy whatever scarce asset you want to buy. Do you agree with that proposition?
Well, have you ever heard of Harold Stinnes? Stinnes?
No.
Stinnes? Well, he was again German Weimar Republic. He was already from an affluent family. He was the son of a sort of like low-level industrialist, and he sort of had probably a similar conversation to the one you and I are having right now. And he said the mark is going to hyperinflate. So he levered up he inherited his father's empire. He levered up. He was buying ships and coal mines and like he did exactly that. And then as the legend goes, he then, like, at the height of the hyperinflation or whatever, he sold one asset and liquidated all the debt. Right. Now, I wrote him up in my newsletter, and a reader from Germany emailed me later and said that there was a magazine article with one of his sons who said that Steins died bankrupt after the inflation. So he rocked the hyperinflation, but he mishandled coming out of the hyperinflation. But, you know, and I've been thinking about this too. And I haven't done so, but I've done to a lesser extent. Like, my main business, we do web hosting, domain names, that kind of thing, and we do acquisitions. So I used to, like, just write a check to buy a company kind of thing. And I'm like, this is stupid. Why am I doing this? I'm going to borrow the money, buy the company, use the cash flow from the company to liquidate the debt. And so I can do that. And if you're levering up to buy cash flow producing assets, it's probably pretty safe. Where I think where I would get a little nervous is levering up to buy, like, static assets that don't produce cash flow, like buy a cottage, buying Bitcoin. Even Bitcoin, we've seen how fast Bitcoin can go down. Like, long term, it's up and to the right. There's never been anything like it, right? Never in the history of any asset have we seen something go from zero to even where it is now. Like, it's just unprecedented. But you see, if you levered up to buy Bitcoin at $50,000, you're probably not feeling too smart right now, right? Even a cottage, like, you know, I mean, I was looking at a cottage last summer and I thought, you know, could lever up to do it because cottage prices were just going crazy. And I said, you know, I'm going to just take a step back. I'm really glad I did, because with the interest rates went up so fast, the cottage prices are coming down really fast. And it's like, okay, that only works. I think what you're talking about only really works if you're levering up to buy, like, a self-liquidating capital asset, something that's producing cash flow that you can use to liquidate the asset. So even if that value of that asset is going down in market terms, like, let's say you buy a rental condo, but the tenant's stable, so they're paying the rent. Even if the condo goes down in value, you can still pay off the mortgage using the rent. You're in a safer place. But to just lever up and buy something to sit on, given what's happened in the last year, you see, you know, when the market swings, it swings hard. And I mean, that's the whole crypto meltdown came out of that. Right.
Yeah. Right.
It was a bit more BS-y, but yeah.
Yeah. Yeah. But we've seen that. Anybody in the capital markets has seen that whole movie before. Like, there was just nothing new in any of that. Maybe speed and size, but I don't even know about that. Let's talk about, because I know everybody's going to have it on their minds. What do you do with price thoughts about Bitcoin in the future? You said up and to the right. I think that's a beautiful way to manage your own affairs, because you don't have to get too particular about it. But you know, Greg quoted the Fidelity price target of some, I don't know what that number was, $1 billion or something. But what is your thoughts on where it goes?
You know, I really don't know. I mean, I'm thinking on the next cycle. You know, we're like a year and a half away from the halving, a little less, right? And the next halving's next May. 6 digits, I figure, is baked in the cake. We could even hit 6 digits before the halving. Does Bitcoin ever get to 7 digits? I think it does. So actually, here's the way I look at this. I picture, like, this little gizmo box. I actually had a cartoon drawn up of it that I call, like, the Great Reset, you know, like, not the Klaus Schwab Great Reset, just the monetary regime change that we're going through right now.
Okay, you gotta get a new name.
Yeah. And on the one side, you got these big balloons, right? And the big balloon is like, one's like sovereign bonds or bonds, and it's like $300 trillion, depending on what you put in there, right? And then the other one is like M2 money supply, and that's like, in US dollars, it's like what? It's, I don't know, $30 trillion now. And then over here, you got these two little dinky balloons coming out, and one's labeled gold, and it's 10 trillion, like 5 trillion of it investable. And the other one is like Bitcoin, and it's like just this little tiny little speck that's like less than $1 trillion, 300 million right now, 300 billion, I should say. And whatever's going on in this contraption, right? Interest rates, hyperinflation, political instability, weaponization of the dollar, the end of Bretton Woods, all of that. This is this big gearbox just mashing around. It's sucking out of this side and it's blowing into this side, right? And so I just think if 1% of the global bond market moves into Bitcoin, right? It puts Bitcoin at like $1.5 million a coin.
Wow.
Maybe higher, right? Wow. And then I think you're going to hear this 1% mantra, because you hear even well-respected investors that have, pedigrees and names saying, allocating 1% to Bitcoin makes sense. And even the new Basel requirements rules have said banks can go up to 2% of their tier 1 capital base can be in Bitcoin. Right? Yeah. So I think you're going to see this mantra because right now Bitcoin is a never expiring call on optionality, right? It never expires. You get this option. If it goes to $1 billion, it goes to $1 billion. If it goes to zero and you only put 1% in, who cares, right? So yeah, and you hear Greg say a lot, it's the most asymmetric trade he's ever seen in his life, right? And it still is at these levels, right? So because, you look at it and go, oh my God, it's at $16,000 or $19,000, and I didn't get in when it was like 50 cents. I missed it. No, don't look at those nominal prices. Look at the size of the balloon over here, this $300 trillion of dead money walking. And look at how big this balloon is over here, $300 billion, right? And it's all going to flow from there into this side, right? Gold's going to go up. Bitcoin's going to go up. Agriculture is going to, it's all going over here, and it's all coming out of there. And that's what I look at, right? Yeah. And I'll say, okay, the move is over when the sovereign bond market is like $20 trillion, not $300 trillion in today's dollars, right? That, I'm making those numbers up, but my point is I'll think that it's run its course when there's like a lot more parity between those two asset classes.
Right. And do you foresee a strong existential reaction from the current central governments that have a monopoly over money, or do we transition here somehow peacefully?
I think long term it's just peaceful transition. I think this is just kind of the way the world is going. But my mantra has always been I never think about it in terms of will governments allow Bitcoin. I think about it in terms of which governments will survive Bitcoin. That's how I think about it. So I have this word I worship called incentives, right? Yeah. So you look at the incentives and it's like, okay, I'm not going to trust central bank printed currency. I'm not going to trust a central bank digital currency. I don't trust the governments not to take my money. I don't trust the banks not to bail me in. And it's not just me, like I'm an insignificant speck in the world, but a fiduciary who's sitting on $1 trillion of client funds is going to say, I'm not putting that in a CBDC. Are you high? That's not happening. And Apple is going to go, you want us to put our treasury in this? I don't think so, right? Like everyone who's got skin in the game wants to keep the skin on their back. And so that's the incentives. And so governments are going to say, well, you're not allowed to do this. And it's like, okay, how about I just put $1 trillion of my money behind your opponent who says we are going to do this, right? That's why I actually say I thank God for big money. Like you hear a lot of people say, "Oh, big money, big corporations." It's like, no, I'm glad that these huge pools of capital exist because they have that skin in the game, that incentive structure, that and often without the sort of like dynamics of political theater to cloud their vision, they can say, look, this is all great. You can go out there at the podium and you can say this to the rabble and the peasants and you can make them feel good, but let's get real here, right? This is not going into a central bank digital currency. This is not going over here. And so I just think the world is going to go in this direction. I used to never think Bitcoin was ever going to become a tier one asset or a global reserve currency. I always thought in terms of a German word called Notgeld, which was emergency money, right? Which came out during hyperinflations, and every hyperinflation has a Notgeld, right? In Zimbabwe, it was prepaid phone cards and gas cards, right? In Germany, different cities printed their own money. And I thought Bitcoin was that kind of a reaction. It was emergency money for a global hyperinflation, high inflation monetary regime change. But I've since changed because of once governments started seizing foreign reserves, once governments started seizing bank accounts, I thought, okay, this is game over. Now this has to happen because if Bitcoin didn't exist, we would have to invent it right now, but it does exist. So now I think it may not never become the world global reserve currency, but it's going to be part of that. You know, Basel's already all but designated it a tier one asset, and it's going to be part of that. All right, we're going to create this basket of whatever this is, and it's going to maybe have a basket of fiat currencies. It's going to have some oil. It's going to have this. It's going to have gold, and it's going to have like 1% Bitcoin.
Do you think that was very good? Thank you. Do you think we wake up one morning in the next couple of years and there's some melt up of Bitcoin? The headline is so and so seriously material country just went all in on Bitcoin, or whatever headline it's going to be, some sovereign fund. I mean, it's only $300 billion. Somebody can buy the whole asset class. Not true because you drive the price up, but
Yeah,
there are fortunes, there are whatever monarchies to be made here. Do you think that something like that's going to happen?
well, I mean, in the last cycle, we had that kind of tempo going, except, you know, it was like El Salvador was the one country, and then Tesla, and then Paul Tudor Jones, right? Like you had that same sort of thing. And I think that's just going to continue. And it's already continuing now. Like even during a down cycle, you have this kind of adaptation. So I don't know if it's going to be like we wake up one morning and it's a sea change, unless it's like the United States or something like that. But I think it's just this continual melt up until like 10 years out, a bunch of people look around and go, oh my God, like hyper Bitcoinization happened. Like at some point in the last couple of years, like now now it's here.
Yeah, right. And then the feeling, the human reaction to that is, I knew that was going to happen.
Yeah, of course.
Right.
Yeah.
The post decision certainty.
Yeah. I tweeted that. Yeah. Peter Schiff. Oh, I called this 5 years ago. Yeah.
Yeah. So I think you just did it, but tell me more about, so your transition into this maximalist thinking has been in the last 12 months. So say more about that.
Yeah. So, I mean, I used to love it all, right? It's like, you know, Bitcoin was the first and it will always, you know, it's sort of almost incarnated in perfection. I mean, I know it's been created, it's been, you know, it's gone through upgrades and there's a core dev team that's continually improving it. But, you know, it came out, it's been solid, it's great, but it set off this revolution. And I liked the whole revolution. Viva la revolution, you know, let 1,000 flowers bloom, all these different crypto projects. I was just like, yeah, these are all great. And I still think that, like, I still love a lot of these different crypto projects. But then I started evaluating each one more on its own merits. I didn't just fall in love with it because it was crypto. I'd be like, okay, is there a reason to fall in love with it? And then I found as I started looking at it, or as events unfolded, there were some reasons to fall out of love with it. Like I've fallen out of love with Ethereum. I used to love Ethereum, and now I don't love Ethereum anymore.
Why?
And
Have you got a top 1 or 2 reasons for that?
the move to proof of stake was a
Okay.
wrong-headed solution to a non-existent problem. So,
Okay.
and it shows how centralized Ethereum is. Ethereum is basically Vitalik. What Vitalik wants, Vitalik gets. And
Right.
he's kind of living in the clouds. Can you hang on for 1 sec? This could
Yeah,
be
sure. Yeah.
He says he'll be here in 20 minutes. So
That's perfect. We're almost done.
okay.
So, okay, so you were talking about Ethereum falling out of that group for you. So keep going.
Yeah. And so, when you listen to Vitalik, obviously an incredibly intelligent person, brain power galore. But when you listen to his ideas about, they're very idealistic and kind of indicative of someone who's like, people at our age, you've been through a few cycles, you've been around the block a few times, right? You kind of realize that there's nothing new under the sun, even though there is. Do you know what I mean? It's like you sort of like realize you see a few cycles come and go. Whereas, they talk about, well, we get to write our own rules of physics. Okay, yeah, maybe you get to write your own rules of physics in the metaverse, but we don't live in a metaverse, and we never will live in a metaverse. We live in the real world, and we have to deal with how things work in the real world. And so there's this lack of centralization. There's this creeping wokeness in Ethereum, and I still support Ethereum name service because I come from the naming infrastructure, and my main company EasyDNS supports it. But I really kind of lost enthusiasm for Ethereum, and then some of these other like the exchanges, I always knew most of them were, you never leave your money in the exchanges, but I'm really disappointed at how badly some of them were outright frauds. I never really had an opinion on SBF, but now it's like, okay, he was a criminal. Up here in Canada, Voyager Digital was publicly traded. I thought they've got to be taking care of the shop rationally. I never had them in the crypto capitalist portfolio, but thank God, because I didn't like that they were losing money as an exchange. They were doing the growth thing. I'm like, it's a bull market, all-time highs. You should be printing money, not losing it. So we never put it in the portfolio, thank God. But like to just watch a regulated, publicly traded company just make these like really almost rookie errors in management was bad. And then a lot of these crypto projects, I'm like, they are a lot of them like the yield farms and stuff like that. It's like, sorry, what is the point of your project? Well, it's lending and staking and yield farming. Lending and staking, yield farming, what? Oh, this other token over here, or this, and it's just like, it's all very circular. And I'm like, okay, give me a project that's got a reason for existing, right? Like things like helium, it's got a reason to exist. Whether it's been functionally successful or not, you can debate that, but it's got a reason to exist, right? So that's why, like now, I guess I'm much more discerning. I've got to pick every project on its own merits. Understand that, like the stock market, most of these things are garbage, right?
Yeah, right.
And then just turn over a lot of rocks and kiss a lot of frogs.
Okay, so you're so talk to people about how they access you and sign up for your letter. And is the letter going to continue to have a crypto portfolio, or how are you going to handle that?
Well, so we were always, so we started as like focused on like macro, like, what's going on in the world financially. And it was publicly traded Bitcoin and crypto companies. So yes, the focus is still on, the portfolio. We actually come from a value investor point of view, not momentum. So we don't try to trade and pick intermediate tops and bottoms. Keep it focused, 10 names and a few ETFs. The odd options play, right?
Okay.
And yeah, we do have exposure to crypto. We still have exposure to Ethereum through that portfolio. And then we're starting to look at individual crypto projects and Bitcoin projects. Although at the moment, it's like the portfolio is buy Bitcoin, right? Like just
Yes. Yeah.
that's the portfolio.
Right.
There's another one, MXC was something I started, like that's like a helium network, like creating a local LoRaWAN network. So that was something that I recommended last summer, or earlier this year, I should say. Oh, it's 2022. So you just go to the cryptocapitalist.com and just click on subscribe. It's usually like 2 PDF. I'm kind of old school. I write 2 PDFs a month, a mid-month portfolio update, and then sort of the month-end sort of macro overview.
Right.
I can put on a deal for Red Jacket customers if you want.
Yeah, sure. Using /Red Jacket.
Yeah. So go, cryptocapitalist.com/Red Jacket, and I'll just put it all on for 50% off. So
there you go.
Yeah.
Excellent. Anything that's great, Mark. Thank you for that. Anything at the end, or we've really covered a lot of ground in a really succinct way. So I appreciate your time and your thoughts.
Yeah, I just, it's interesting watching the price action, although, the price action is not the be all and the end all of all this, but it's just, I've been telling my readers for the last couple of months, I said, I don't think we're done. I don't think this winter is over. I don't think this bear market is over. And I said, I want everyone to psychologically prepare for the demise of Tether, right? I think Tether could be a fraud. The people who were saying it for all this time may be right. And I can tell you why if you want. And I think when Tether goes, there's another leg down that could bring Bitcoin under 10,000. And were that to happen, I got a bunch of like USDC sitting on the sidelines, and if Bitcoin comes under 10,000, it all goes in. Like I just push everything onto the table and buy Bitcoin. Now, having said that, and I've never bought Bitcoin really, like I've always just earned it with the business, right? But I was noticing last month I was putting the issue together, and I realized the last 2 halving bull markets started 15 months before the halving.
Oh, interesting.
And I'm like, that's like right now. Like if the pattern holds, then Bitcoin is bottoming like now. Now I know, it's only been a few weeks that we're into the year, but we're up 17% on the year. But everything is up. So this is the thing I want to get more clarity on. We're still in an environment where it's all one trade, right? Either everything goes up or everything goes down. And I'm waiting. And I think when this recession hits and when the inflation hits and when things start to really enter their own dynamics, that's when we're going to start to see decouplings, and we're going to start to see things move on their own dynamics, and it's not going to be all one trade anymore. And my theory is that Bitcoin, and thus the Bitcoin stocks, there's going to be a sector leadership in the stock market. And I think crypto stocks, the good ones, are going to be among the leaders this time, right? The unicorns, the days of the unicorns are over, profitless unicorns, and the days of like energy, gold, silver, and these Bitcoin stocks and some of these crypto stocks, I think will be the new leaders. I think within the crypto space, you get this decoupling where it's not all one trade anymore. Like right now, you'll go to CoinGecko and everything is up, right? Well, I think that will end at some point. I will hope that will end at some point, because you see a lot of shit coins. Sorry, am I allowed to say that? You see a lot of
no problem.
See a lot of garbage coins going up just because everything else is going up, right? And I think at some point that changes too. But right now it's all one trade, so it's really hard to say, is Bitcoin bottoming or not? But I'm telling people, brace yourself, because I still think I still think Tether's going to go. I think Binance may cave in. I don't know.
Beautiful. All right, great. Thank you, Mark.
All right. Thanks, Dave. Good to see you again.
Right on.
All right.
Ciao. Bye-bye.
Thanks very much for listening. We'd love to hear from you. If you have questions or maybe you have something to add to the conversation, we're at redjacket.ca. And on the website, you'll see the phrase relationships matter. We really believe that and encourage you to start one with us. Thanks again for listening.